If you're watching this, it's likely because you've lost money trading in the stocks, crypto, or other markets. Don't worry, I'm here to help you improve your trading mindset and become a successful day trader. As a trader, it's essential to have a systematic approach to trading. In this video, I'll share 5 rules that you must follow to improve your trading psychology and relax while trading. First, let me acknowledge that losing money can be tough. I've been there too, and it's not a great feeling. However, I've learned from my mistakes, and I'm here to help you do the same. So, what's going wrong? You're probably getting into trades without a solid analysis just because the price is trending up. You might be thinking, I'll just scalp a little bit, make some money, and walk away. But then, you don't take your profits, and the trade reverses. You're left thinking, no, it's going to go back up. But it doesn't, and you end up losing even more money. This snowball effect is a common problem for many traders. You get into a trade with emotions, and you don't have a clear plan for getting out. Your loss threshold doesn't exist, and you end up blowing your account. Don't worry, you're not alone. This is a common issue for many traders, and it's why 95% of traders lose money. But I'm here to help you change that. Let's take a look at an example of how this happens. Imagine you see a big, green, sloping trend on the charts. You think, wow, this is going to be a great trade. So, you get in, but you don't have a solid strategy or stop losses in place. The next candle starts going red, and you get stopped out. But then, the price starts consolidating and you think, I knew it was going to go up. So, you get back in, but your stop losses are too tight, and you get stopped out again. This cycle repeats itself, and you're left feeling frustrated and emotional. You're thinking, why can't I just make some money? But the truth is, you're not following a rules-based trading strategy. So, what is a rules-based trading strategy? It's a systematic approach to trading that involves having clear rules for entering and exiting trades. You need to have multiple confluences or indicators that confirm your trade. For example, you might use a moving average strategy where you only go long when the price is above the 21 SMA and short when it's below. You might also use other indicators like doji candles or bearish engulfing patterns. The key is to have a clear plan and stick to it. Don't get into trades based on emotions or gut feelings. Instead, follow your rules and wait for the right opportunities to arise. Now let's move on to the 5 rules for improving your trading psychology. Rule number 1 is to trade on rules, not emotions. This means having a clear plan and sticking to it rather than getting into trades based on how you feel. Rule number 2 is to avoid trading on emotions. This means taking a step back and assessing your emotions before making a trade. If you're feeling anxious or emotional, it's best to wait until you're feeling calm and rational. Rule number 3 is to practice proper risk management. This means setting clear stop losses and take profits, and not risking too much on any one trade. It's essential to have a solid risk-reward ratio, so you can afford to lose some trades and still come out ahead. Rule number 4 is to avoid overtrading. This means focusing on a few key markets or pairs rather than trying to trade everything at once. It's essential to simplify your trading and avoid getting overwhelmed. Rule number 5 is to avoid revenge trading. This means not trying to make back losses by trading emotionally or impulsively. Instead, take a step back, assess your emotions, and wait until you're feeling calm and rational before making your next trade. By following these 5 rules, you can improve your trading psychology and become a more successful day trader. Remember, trading is a game of probabilities, and it's essential to have a solid plan and stick to it.